Hi, and welcome to this week's Auspicious Agile video blog. This is John Okoro. This week we're going to be continuing our blockchain series and taking a look at ICOs, which are initial coin offerings, and airdrops. So we're going to take a look at these. In 2017, the market was really hot, and we had a lot of people who were making quite a lot of money and really getting into ICOs a lot. It's more of a bear market now for cryptocurrency. But nonetheless, people are still making money in the area of ICOs. Companies are still raising a lot of money, often millions and millions of dollars. And so we're going to take a look at how this works and what people are doing, how they're investing in them, and how you can get started on that. So before that, we're going to take a quick look at a quick disclaimer here. So please do read through that, and we'll get into the topic. Great, so hopefully you've had a chance to take a look at that. Let's first take a look at the concept of an ICO versus an IPO, so initial coin offering versus initial public offering. Most of you familiar with the stock market, the bull market, the bear markets, are familiar with IPOs. This is where a company will list their stock on the market. It usually goes to a group of wealthy individuals and private investors and institutions, institutional investors, investment bankers, and they will be able to invest, and they'll get a great price on that stock before it goes on the market. Like if you got into Facebook's IPO or others, you would make quite a lot of money. So usually this goes to high net worth individuals. On the other side, you have what we call an ICO. This is new. This is basically crowdfunding for blockchain projects and companies. And an ICO is an initial coin offering. And it goes out to everybody, not just high net worth individuals. Anybody in the world can pretty much invest, although there are some regulatory restrictions. And anybody can go in and they can put their money in, their tokens in, and they can get tokens and they can invest in it. And companies are raising 20 million, 30 million, 100 million, 150 million, even more. So this can be invested by just about anybody. So that's the difference. Now, of course, both are going to go onto what we call exchanges. For traditional IPOs or stocks, they're going to go out as stocks and go on the stock exchange, like the New York Stock Exchange, the NASDAQ, London Stock Exchange, etc. And for the ICOs, they're going to go onto token exchanges or cryptocurrency exchanges like Poloniex, Bitfinex, Binance, QNX, or others like that. Any of these things can go up or down. There's no guarantee they're going to go up. But if you do well and you pick them well, you can make quite a lot of money by investing well. And of course, with the ICO, you really are your own venture capitalist or investment banker. Now, a question would be, are these things safe? Is it really safe for me to invest in an ICO? Here's our security guy with his Ethereum shield. And the question is, am I going to lose money on this? Well, statistics actually tell us that 80 to 90% of ICO projects have actually either been scam ICOs or they failed. The projects haven't really delivered the results. That still means that 10 or 20% of these projects actually are delivering on the results that they say, and they're delivering good projects. And if you think about the dot-com boom in comparison, back in the late 1990s, companies were making money, and there were many of them that were not very good ones and didn't do well, but you still got Facebook, Amazon, Google, etc. out of that dot-com boom. The key is to be wise and to be safe if you invest in an ICO. So you might ask then, do people make money buying ICOs? Well, the answer is absolutely yes. Right? People definitely make money on this. Now, people also lose money on this, so you have to be wise. But people have made millions in buying ICOs, buying the cryptocurrency projects, and there's no guarantee, though. Right? So this can go up, it can go down. We're going to take a look at an example of a gentleman who does this, Ian Bellina. But before we do that, let's learn about how to buy an ICO. So first, you research the ICO. We'll talk about that shortly and some techniques you can use to research it. And then you're going to read their white paper. That's how you research and learn about their project, probably on their ICO website. And you can find that on ICO Alert and other websites to find out about the ICOs. Then you're going to register with the ICO provider, including what they call KYC, which is Know Your Customer. From there, you're going to send your cryptocurrency, usually Ethereum, it could be Bitcoin or some other, and you're going to send it to their address, and they're going to get your registered information, and then they're going to send to your wallet their ICO token. This is an EOS token. They're going to send you to your address the token for the project. So now you have your tokens, and hopefully they go up in value, and you're ready to go. Now, Ian Bellina, as I talked about, is somebody who does a lot of investing in cryptocurrencies, ICOs. He's made a ton of money doing it, and he actually tells a lot of other people how to do it, and he kind of open sources his method. I think his YouTube channel, and it's called Diary of a Made Man, so you can check that out. But basically, I'm going to go briefly through the method that he uses in order to be able to invest and make quite a lot of money on ICOs. He calls it token metrics, and he open sources his approach. And he looks at quantitative and qualitative aspects of projects. So first thing, of course, he looks for is a good project. Is this a project that he's interested in? He invests in infrastructure projects, high-speed blockchains, video projects, privacy coins, privacy projects, etc. And he's going to look at those. He's going to look at statistical information, and he's going to look at a lot of the quantitative measures as well associated with the project. Now, he looks for what he calls an all-star team. An all-star team for Ian Balina is either advisors and team members that have 2 years at a public company or 6 months at a top 25 market cap token project. So this is to say that he can research them by going out and looking at the public records of a public company, or he can see that they've been on a project like Bitcoin or Ethereum or some top token project or Ripple, right? And being able to do that allows him to get a good comfort level that these people are going to be able to do a great job on the project that they're working on. Now, besides the all-star team that we got here, is our all-star guys, he's going to also be looking for a working prototype. Like we said, 80 to 90% of these ICOs have kind of either take the money and run, or they really haven't delivered anything. So if you have a working prototype, it gives you a higher comfort level that, you know what, there's actually something working, and this project is useful, and this project is actually going to probably deliver something at the end of the day. So he looks for a working prototype. And then he also uses statistical data we talked about, which is his token metrics, part of the approach, looking at the number of tokens, the amount of money that they're raising, and looking at that overall. Now, Ian takes profits when he's made 3x, which is 3 times his initial investment. He'll sell the initial investment and take it out, and then he will take another 5x. Every time another 5x increase, he'll take another 20% of the profit as well. Ian invests in ICOs that score 80% or better on his spreadsheet, which he used to make publicly available, and I think he'll be making available as a blockchain project soon for people who follow him. And he invests no more than 2% of his project ICO portfolio in any one ICO. So he distributes it or uses a Solomon principle investing, which is that you don't put all your eggs in one basket. Now, let's take a look. Now, there is another factor with your ICO or initial coin offering, which is that there's only certain dates. You have to get into the ICO during the dates that it's available. Usually there's a private sale, then there might be a pre-sale, and then there might be a crowd sale where everybody can get in. You have to do what we call whitelisting first and register, and in those dates you can buy your tokens. But if you miss it, don't worry. You can still go out to the exchanges like Poloniex or Quionex or whichever exchange you go to, and you can still buy those tokens, although you may not get them as a lower price, or sometimes you get a lower price. You never know. Let's take a look now at airdrops. We're going to take a note and a look and see how airdrops work. Basically, airdrops are free money. You heard me right. It is free money. So giving away the tokens, and you say, well, why on earth would anybody give away the tokens for their ICO, for their blockchain project? Why would they give away their tokens? Well, there's several reasons. One is that they want people to get visibility for their project. There's kind of a bias towards tokens or coins that you own. You're going to have more loyalty, and it also rewards loyalty and creates a base of token holders for the projects. And the token holders, often they will give tokens, for example, to people who are already holding other tokens. So for people who had Bitcoin, one of the most famous examples, they had what's called a hard fork, which means that there was a project that came from the Bitcoin code base, and they made their own project called Bitcoin Cash. So everybody who held Bitcoin at that time, they took a snapshot of the blockchain, and they gave them Bitcoin Cash tokens. So they got free Bitcoin Cash, which worked quite a lot today because they had initially invested in Bitcoin, and they got the airdrop. Now, you can see a couple airdrop information websites here, airdropalert.com, airdropaddict.com as well, that you can check out. Now, for regulation, it's important to remember there is regulation. Whether you live in the U.S. and Uncle Sam's taking a look at what you're investing in, or whether you live in China and the Chinese government's taking a look, or you're in India or Russia or Korea or wherever you are, in Africa, South Africa, wherever you are, there is regulation. You need to be aware that this is regulation that affects the people who issue the airdrops and the ICOs, and it may also restrict what you can participate in. So you need to be aware of that. You need to check that out and be aware of the regulations for your jurisdiction and where you live. But certainly lots of opportunity and possibility to invest and profit from the ICO, the initial coin offering and airdrop space. As always, you can support us on Patreon with the Auspicious Agile blogs, and if you enjoy them, you can also find ways to support using cryptocurrency, either signing up and using some of the referral or affiliate links below, or by donating direct cryptocurrency as well. So always appreciate that. As always, stay agile, and thanks for listening, and hope your cryptocurrency and ICO investing is